Hello everyone, how's it going? In this video, we're going to do an analysis on NIO. We will go over the bull case scenario as well as the bear case scenario. Let's get into it. So the number one aspect we have on the bull case is that NIO is a founder-led company. Bin Lee or William Lee, the founder, he is still running the company. And why is that important? There are two types. One is a founder-based, the other is an agent-based. A founder is someone who doesn't worry about anything but the company. The company is like a child for the founder, and they're not worried about anything, the reputation, nothing else matters but the company. Whereas an agent operated business is worried more about his own career than the company. So that's a plus. Number two, Bin Lee was born on a dairy farm in Anhui province. And why is that important? Anhui province is a mountainous region, and that's where he grew up. And running a dairy farm is a very big lesson in leadership, where you're especially running cattle, leading them to different pastures, helping them throughout the day, taking care of them, nurturing them, at the same time protecting them the attacks of wild animals. That is something where you learn when you're being a shepherd handling cattle. It might be a little bit out of the usual, but that's something you pick up when you're working in that region. Number three, William Lee has a background in this well before NIO. He started his businesses back when he was 21 years old, right in the dot-com bubble. He started off with a few e-commerce websites, especially the Beijing Bit Auto e-commerce company. And this was all auto related. So he had a very good background even before he went into starting NIO. And in this position, he would be reporting different information about the auto sector. He had advantage and luxury with sitting with different types of and big shots in the auto industry, and where he picked up a lot of knowledge and information about the business, which has helped him in running NIO at the moment. Next, we have the NIO battery swap technology. Now, this brings the cost of the car well below. It makes it very easy and affordable for a person to purchase. And NIO takes care of all the battery swapping and makes it very easy for the person to handle the car. Next, it has a very huge tailwind from the Chinese government. We'll be going into a little bit detail in the next few slides, but here, looking at this chapter, NIO gains advantage after Chinese government favors battery swapping for EVs. So, like the US, China also has its own subsidies that it's giving out to electric vehicle manufacturing in order to promote the EV sector. And in April of 2020, it started cutting down on some of these subsidies. So it came back and said, okay, anything that's below 45,700, you can have these subsidies, but anything more, you won't be receiving those subsidies. So with Tesla, the Model 3 qualified for it, but the Model Y, which was more than 45,000, currently at 54,000, could not qualify for that subsidy. And if you look into NIO, NIO is in that same sector of luxury vehicles. But there was a small clause. According to the local media, cars with swappable batteries can still benefit from the EV subsidy without adhering to the price requirements. And that is an advantage which you will get only if you are a Chinese person. That's the favor you're getting and a huge tailwind from the Chinese government themselves. And this is an interesting article. This was published back in 2013 in the Harvard Business School. And it's called the Stanford Social Innovation Review. The title is China's Quest to Adopt Electric Vehicles. Very interesting article. It's only 7 pages long. All the links will be in the description for you to review it yourself. And the article goes over how China had been focusing for over the past few decades into becoming the biggest and the largest automaker in the world. And in 2009, when they reached that mark or milestone of becoming the best and not the best, but the biggest or the largest automaker, they realized that they had a bigger problem in hand, and that was pollution. Right at that moment, they started changing gears and started focusing on the EV sector. And they realized they wanted to get a grab on that and become a major player, a dominant player in the global market. So you already have a government which is focused in this sector and they want to improve their current stand in the global market, but at the same time also want to develop their own companies out in the global arena. Next, you have this sector with regards to the analysis of 100 backers. This is very interesting. And I'll show you, I'll give you a little bit description of this and then go into what's so much relation with NIO. This is an article by Analysis by Tony, an analysis of 100 backers. And in this article, he went over a few hundred baggers in the past few years, and he took out the overlying pattern in all of these 100 backers. What was common in all these companies? So there are a few things that he goes over. And one of the most important one is the fact of PE expansion. So all of these 100 baggers had one thing common, which was PE expansion. And the way he explained is, over the few quarters, if you look into the quarters, the company should have an incremental growth quarter by quarter, not annually, but quarter by quarter. And that is when you will get these PE expansions. So he gave a simple example. Let's assume there are two companies with ticker symbol FLAT and ACC. And let's say the earning per share in the year of 2000 was $4 for each of these companies. So they were making about $1 in each quarter of 2000. And then came 2001. The earnings for FLAT were 1.25 for quarter one, 1.25 for quarter two, 1.25 for quarter three, and again 1.25 for quarter four. So it has been flat for all the 4 quarters. And then overall, if you look into it, they had about 25% growth year over year. So from $4 per share, they came to $5 per share, which is good. Now you came with ACC. ACC had a different route. It was growing on a quarter by quarter basis. On the first quarter, it had a 10% growth, only 10% compared to 25% growth FLAT had, but still a growth. And you had $1.10. Then you had 20% growth in quarter two, still less than FLAT, but still a growth. Then you had quarter three, which was 30%. Now it started to pick up. Then came quarter four, where you had 40% growth. So every quarter it has been increasing. And by the time the year end, both of them had the same $5 per share. But if you look at the stock price, ACC would have a better PE ratio because of the PE expansion that would happen. And let's understand NIO's quarter example. If you look into the revenue section and the deliveries that they are producing over the past few quarters, they have been increasing quarter over quarter for the past 2 years. So if you're looking at these quarters, you can see an incremental increase every quarter. And that's where these factors help in creating those 100 backers. Now, we don't know whether NIO would be part of that 100 backer or not, but at least these factors are there for us. Next is NIO creating a brand for itself. So NIO is looking at itself not just from a car manufacturing company, but they are looking beyond that. They're looking into it, they're thinking about themselves beyond a car manufacturer. They're into apparels, they're looking into logistics, dresses, they're looking into different types of products to incorporate into the daily lifestyle of people. So they are branding themselves so people can adopt them, not just because of the car, but for the products they are working with. And that's where they're trying to create that brand value among their people. Next, the most important thing is a barrier to entry, especially with the power swapping that NIO does. The battery swapping technology requires a huge infrastructure, a huge network of battery swapping stations across the state country, across the nation, where you need to have these battery swap stations that could work for NIO or any electric vehicle that would be planning for. So in order to set up that, it would require a lot of capital, a lot of intense work, and a lot of investment required. Well, NIO hasn't created that network yet, but it is well into that stage, and it's into that nascent stage, and it understands that once they reach that barrier where it's difficult for any other company to enter and take that market share from them. Once they have that network created, it makes it easy for people to change or swap the batteries, but at the same time, it's very easily and readily available for them. That's a huge barrier to entry that NIO will be creating in the future years. Now let's go into the bear case scenario. Number one is the market price for the company. It is sitting at about 66 billion. And this is a chart on Google that showed about all the different companies, car manufacturing companies in the world, and ranking them based on their market cap, and also showing the annual vehicle sales each company is producing. You have on the top Tesla, which is at about 734 billion market cap, and they have about 500 million or $500 annual vehicles per year. Then you have Toyota, which is only $250 billion market cap, and they are producing north of 9.5 million vehicles every year. Similarly, you have Volkswagen at 150 billion and producing 9.3 vehicles. Now, Toyota and Volkswagen might not look like EV vehicles, but still they do have that sector, and they have a huge market share out in the global market. Then on the bottom, number 8, you see NIO, which is at about 66 billion market cap, way less than what Tesla and other companies have. But still, compared to the amount of vehicles that they're producing, this is something which was in the past about 43,000 vehicles per year. And this is nowhere close to the other people who are there on this list. So the share market has already given the price based on a lot of future growth that they are expecting from this company. So there's already a lot of future growth that is being incorporated in its current market price. So the margin of safety is very less in this company. But any mistakes that NIO does, well, say for some quarter, they were not able to produce or meet their numbers, or some other issues that happen, like the chip shortages that is happening, if it were to prolong, or any problems that NIO will encounter, that would affect the market cap considerably. So the margin of safety with this particular stock is very, very less. They have very less room to make any mistakes. Next, you have a list of all these different car companies. So the amount of competition that is out there. NIO, Tesla, they seem to be out there. They're one of the biggest EV manufacturers. But if you look into it, all the other companies are jumping onto it. Monish Pobrai mentioned that capitalism is brutal. It's almost like dog eating dog. And when you see something is working, like the Tesla working out, everyone else will jump in to take that share away from Tesla. And you can see all these different electric car companies. And these are just outside of China, not even China. And if you look into the companies that are in China, these are all Tesla, BYD, CAIC, NIO, Xpeng, Li Auto, Geely, Byton. These are all companies who are manufacturing or who are looking into electric vehicle manufacturing. They have a huge competition up there for themselves. Next is non-recurring revenue. When you sell a car, there's not much recurring revenue that's going to happen. And people tend to hold a car for at least 5 years. So it becomes difficult to have that recurring revenue coming out. Yes, at some point, the power swapping station would help in getting some revenue back with them on a recurring basis, but compared to the major chunk, it will be very, very less. Next, you have this particular factor about how many different EV vehicle manufacturing companies came out, but they all failed. Faraday Future, this came out back, and it was called as a Tesla killer, and it killed or it died by itself. Right now, you can see there's a resurgence going on. It's coming back to the market now, but yeah, it did died. Then you had the Jaguar E-Type, which was discontinued. This was another company which grown a lot of publicity, a lot of momentum out there. The Fisker Karma, this was also discontinued. Then you had the Dyson EV. You have NIO itself, which at some point, at one point back in 2019 and the beginning of 2020, it almost bankrupt, and it was almost about to die unless the Chinese government came in and helped out. Then you have the Chevy Volt. This is different from the Chevy Bolt. Chevy Bolt is working out nice, but this is Chevy Volt, which was also discontinued. So all these companies, all these manufacturing companies came out in the market, and they tried to take a jab on the EV sector, but they all failed. And Warren Buffett, back when the dot-com bubble was happening in 2000, someone asked him, there's the internet is, and he was not investing into any internet stocks back then. The dot-com was huge, something like the EV sector that's happening now. So they asked him, well, you understand that technology and the internet is a huge, huge big deal, and why are you not investing into these companies? And Warren Buffett simply explained that yes, we don't deny that internet is the huge or the very big development for the humankind, and it'll go and take us to far off distances. And one of these companies, among all of these different dot-coms, there'll be one or two companies who would reach that top or who would go to that nirvana land, but there is no way for them to predict and understand which company would go. So hence, it was easy for them to just have a step back and just look at the show, have a popcorn in hand, and understand how the market is going. And surely but surely, later you saw the dot-com bubble fell, and Warren Buffett came out to be true. But I'm not saying this could happen with here, but something to keep an eye, something to understand how the market factor plays and how other different competition companies are coming out and why NIO would be on top compared to the other companies. Next is this. These are few factors that was happening. This is prior to 2020, prior to the huge run that NIO took place from the start of 2020's bull market. This is back from October 2019. NIO was deemed too risky as government cancels talks for a factory in Huzhou. Think about it. Right now, NIO is seen to look like one of those companies which is China's favorite companies, especially with all these issues that are happening back in China with the regulators. You can still see that NIO is untouched and is immune to all those regulatory issues. But there was a time when NIO was considered risky because it was not receiving the right funding, the right help and the benefit from the government of China. And there was also talks about this particular investment that they were going to get from the Beijing E-Town capital for RMB 10 billion, but it never came out. They also publicized this. This was back in 2019, in the first quarter of 2019 call, that NIO announces new plant and a CNY 10 billion investment from the Beijing E-Town capital, but it never came through later on. Then you had this 10 billion yuan investment, NIO China headquarters settled in Hefei, China. This news came out earlier in 2020, and that gave a lifeline for NIO to run. It was a huge capital investment company, and they were burning capital at a very high rate. Then now with EV vehicles on the rise, the media has a lot of attention for EV vehicles at the moment. And any such articles that came out, this is back from 2019, and there are many such articles that you will notice where electric vehicle, SUV fire reported in 1 month, or this crash, the autopilot crash, that crash. There will be any small mistakes. Media will take this out and blow it up for everyone to look into. And I mean, it's not that there's all the other companies that we saw in this list are immune to attacks. Everyone will have their fair share of accidents, but just because this company is in the EV sector, the media will tend to blow up this report, and this will affect the sentiments on the stock market. The next is the company itself is a huge capital intensive business, and that's something which Warren Buffett invited. The major yardstick for the biggest yardstick or the most important factor for Warren Buffett to look into or understanding the company, the yardstick for that is the amount of dollar invested returns how many dollars in the pocket. So basically, how much dollar do you need to invest in order to get some amount? So they're basically looking into the margin. What's the positive margin with the company? And in this case, it's a huge capital intensive business. You can look into this. The cost of revenue was 6.8 billion, while the revenue was 8.45 billion. Then the quarter for March 2021, again, cost of revenue is 6.4 billion. December of 2020, cost of revenue was 5.5 billion. So they are burning cash at a very high rate. And this is evident, especially for a growing company. But think about it with regards to what kind of return would you get in the future. The next is the competition that's available in the market. And when these types of competition comes in, it basically depends on the most foolish person who's willing to bet on everything. So this is a simple example. NIO has this free power plant package going on for new customers. So you can have a free charge and a free battery swap on NIO's expense. So NIO will take care of your free battery swapping, and it will also help you charge for free. Imagine your gas that you're putting down in your car free almost every time you go in there. That's the benefit that you're getting from NIO. And where is NIO getting all that from? Basically from the dilutions, basically from the shareholders' interest. And that's where NIO is giving out. Well, of course, they want to attract customers and they're doing these effects, but it was good if only NIO was doing this. Just look into this. Xpeng announces free charging plan for 3,000 kilowatt hours for each car per year. Then you have Tesla. Tesla gives Chinese owners free supercharging during the coronavirus outbreak. And when you have other companies who are jumping into this, then this power plant just becomes a competition or race to the downfall, where you're just trying to give out the best and the easiest and the most cheapest option for the customers. And that's where you're bleeding money from the shareholders. Oh, now I just want to share this information with you. This is just a research. This is not financial advice. Do your own research before you do anything with the companies. With that, take care, stay safe. Bye-bye.